Recently, Blockfi filed for Chapter 11 bankruptcy. What does this signify for the cryptocurrency community, crypto holders, and its users? Does having $257 million in cash mean Blockfi have enough to keep running their business? Is Blockfi's bankruptcy related to FTX? Follow along while we analyze this detail by detail. Days after halting withdrawals due to the ongoing repercussions of cryptocurrency exchange, FTX's bankruptcy filing, crypto lender, Blockfi filed for bankruptcy protection. Blockfi, which had a $4 billion valuation in a funding last year, experienced losses on loans to the bankrupt crypto hedge fund firm 3 Arrows Capital in July. The business announced that it was seeking Chapter 11 bankruptcy protection, indicating that it wanted to restructure while carrying on with business in
America. Giving these interviews, more of the contagion is being felt. Of course, we know Blockfi was in a bad state when it paused withdrawals after the collapse of FTX. They have now announced and filed papers for Chapter 11 bankruptcy. What this means, David, is if you have funds in Blockfi, unfortunately, you're not likely to get them out anytime soon.
The company has more than 100,000 creditors, and Blockfi's assets and liabilities range from $1 billion to $10 billion. 100,000 creditors are a huge amount of people. Who would the biggest and smallest creditors be?
Who can it be?
In the video, Ankura Trust Company, which appears to have been recruited in February, is listed as the company's top creditor in the bankruptcy petition made, is to be paid $729 million, followed by FTX US at $275 million. Fourth on the list, the Securities and Exchange Commission, SEC, owes $30 million in fines. According to a press release from the Securities and Exchange Commission, SEC, dated February 14, Blockfi was accused by the SEC of failing to register the offers and sales of its retail cryptocurrency lending products. As a result, the company agreed to pay a $50 million fine, as well as an additional $50 million in fines to 32 states to resolve related allegations. For CNBC and for Wall Street, billion-dollar fines for violations of the law are just part of the price of doing business, along with litigation costs and compliance. Alex Perrine. According to the bankruptcy filings, several well-known investors have also backed Blockfi, including Bain Capital, Tiger Global, Coinbase, the Winklevoss Twins Venture Capital Company, and Thiel's Valor Ventures, which owns a 19% share. A $100 million fine is a huge
blow to the culture.
That is what happens when you don't regulate a company. I will touch more on regulating the crypto space later in the video, so stay with me. Blockfi, which was established in 2017, prided itself on bridging the gap between cryptocurrency and the conventional financial system. Big-name tech investors have invested hundreds of millions of dollars in Blockfi recently, including Bain Capital Ventures and Tiger Global. Blockfi claimed to manage more than $15 billion in assets last year as cryptocurrency values rose. After the price of cryptocurrencies crashed early this year, Blockfi was not the only business that was hurt. Bitcoin, the most popular digital currency, saw a decline in value from more than $68,000 to less than $16,800 as of now. Imagine purchasing Bitcoin from $20,000 and it went to $68,000 and you didn't take profit and it is back to $16,800. Your partner will divorce you if she gets to know it. Ethereum, the second largest cryptocurrency by market cap, also saw a huge decline. Among the other businesses that have already declared bankruptcy are Celsius Network, FTX, and Voyager Digital. Subscribe to the channel and hit the bell icon so you don't miss any of our posts for future updates on the progress of the bankruptcy filing. In June, Blockfi reduced its workforce by around a fifth as the overall market capitalization for cryptocurrencies fell. The crypto market capitalization dropped from over $3 trillion to $800 million in just 1 year. Blockfi CEO Zach Prince stated that the company had to liquidate a significant client following the bankruptcy of 3 Arrows Capital. Though he did not specify whether or not this client was 3 Arrows, Soon after, FTX offered Blockfi a credit facility of $250 million, which ultimately developed into a $400 million credit facility and allowed FTX US to acquire Blockfi.
Right? I mean, these firms in the crypto lending space are down pretty significantly. Some reporting suggests that this may not be enough to stop the bleeding, but I think for the time being, it is important that private firm is stepping up to help another private firm.
Buffers, and several of them found themselves exposed when a lack of collateral caused them and their customers to bear significant losses. The cryptocurrency sector is plagued by fear, and exchanges are now rushing to show customers proof of reserves that their assets are completely backed. The CEO of the cryptocurrency exchange Binance revealed Binance's reserves and called for greater transparency in the sector. However, many critics argue that without liabilities mentioned as well, giving proof of reserves is useless. Proof of reserves is a good start, but it needs to be coupled with proof of liabilities in order to be useful. Amin Gunsire. Additionally, there are requests for signatures that demonstrate custodians have control over wallets and cryptographic evidence that each account is included in the account of assets and liabilities. As lawmakers and federal regulators attempt to monitor the industry more rigorously in the wake of what is only the latest controversy to hit the crypto world, greater regulation may be the largest fallout from the collapse of Blockfi, as any delay in this may lead to loss of confidence in the crypto spaces, consequently leading to more meltdown of the crypto market cap. As we wish confidence has been restored in the crypto community by ensuring that there is proof of reserves and proof of liabilities, there are some good things coming in the crypto world that you should check out in the following video.